So in the fourth learning objective, this is about explain and demonstrate the accounting for cash dividend. Okay, for cash dividend. So cash dividend, you give the cash to your shareholders. So cash dividend is not the only type of dividend. You could also have stock dividend. So instead of giving cash to the shareholders, you could give them shares. Okay, you could give them more shares as a dividend. Okay, so there are three important dates. Board of directors formally declare dividend. So at this point, once you declare the dividend, you have to pay the dividend. Okay, so this is a very critical point of time. Prior to the declaration, the company is not liable for paying dividend. But since you made that declaration, immediately after that declaration, the company have to pay the dividend. Okay. So on the declaration day, December 1st, your journal entry would be like, you have a cash dividend. Okay. You declared cash dividend. So dividend has a normal debit balance, right? Your dividend account balance increase, you debit because dividend is like expenses, have a normal debit balance. To increase dividend, you need a debit dividend. And then you have liability, so you should credit liability, dividends payable for 50,000. And then the record date, okay? Record date is to determine ownership, right? So we declare dividend, we should know who are eligible to receive the dividend. Right? This is important because the stocks are traded all the time, right? The stocks are exchanged all the time. So yesterday I was the shareholder, right? But the next day I sold my share to another person. So the other person became the new shareholder. And I have nothing to do with this corporation. But there is a dividend declared. Am I entitled to receive the dividend? Even though I'm not a shareholder anymore. So that's why another date is important, called record date. This is the date ownership of shares is determined. Only as of this date, you are the owner, you are entitled to receive the shares. Okay. So
I have a question, Professor.
Yeah, go ahead.
Isn't the dividend the money you get when you sell a sharehold?
No, dividend is the money, okay, the company paid the shareholders.
Oh, okay.
Yeah.
So
You
that
have
means
to, you have to have the share, otherwise you will not be able to receive the dividend, right?
so that means when the dividend increase, do we credit it or do we
Debit,
debit
because
it?
dividend account is like expenses account.
Okay.
Yeah.
Okay. Thank you.
Yeah. So on the record date, you just determined who are entitled to receive the dividend. Okay. And there's no journal entry. You don't have to do anything. On the payment date means this is the dividend that is paid. You're going to use cash, right? So when you use cash, your cash will decrease. So you credit cash for 50,000. And since you pay off this debt, so your liability will decrease. So you debit dividends payable for 50,000. So does anyone have any question on this? Okay. So we just mentioned that example is the example for common shares dividend. Okay. preferred shares cash dividend. Okay. The only difference is when the preferred shares are cumulative. Okay, when the preferred shares are cumulative, okay, cumulative dividend must be paid both current year and any dividend in arrears. And preferred share dividend has to be issued prior to the common share dividend. So if you have accumulation of dividend in arrears, but there's no dividend declaration, those balance in the arrears are not your liability. That liability is only triggered when the board of directors made an announcement about the dividend, right? Issuance. The amount of dividend in arrears will not be reported as liability on the balance sheet, but it has to be disclosed in the notes to financial statement. So does anyone have any question on this topic?